The S&P 500 grinded higher during Friday's trading session, getting above this key 6870 level that we've seen over the last couple of months going back into October. We're also getting really close to all-time highs, which we saw at the end of October, just above the 6900 level. Friday's trading session closed up 0.19%, right at 6870, and this slow march higher is not a surprise as we continue to see the largest game exposure concentration at the big 7,000 strike. If you've been watching for a while, you know that's been our year-end target. It looks like this short consolidation period immediately following the Thanksgiving holiday here in the US is now starting to break to the upside. The 50 EMA across all the smaller time frames continues to point higher, simply indicating that the overall trend is to the upside. Another factor that we are keeping our eye on is the volatility index. On Friday, down another 2.34%, now getting back into the 15s. Volatility, if you recall, just a couple of weeks ago was peaking here near 30. I think we got as high as 28, but since then, vol sellers have stepped in, slamming the VIX back down. Now we see the largest negative GAM exposure concentration on the VIX at the 16 strike, so we could be reaching some sort of floor of support. If we go back to September, this 15 to 16 zone was an area of support for volatility. That doesn't mean that we're expecting a big spike higher or anything. On the contrary, we're seeing mostly negative GAM exposure on the volatility index options, most of the volume also at strikes well below 20. So while there could be some slight increase in implied volatility over the next week or two, broadly speaking, vol sellers are strongly in control here of this market. Next, let's take a look at crypto, with Bitcoin continuing to trade higher, not doing well as the broader indices in the equity markets, but at least holding those lows that we saw here about a week ago, just above the 80,000 strike, and now trading at $91,342 at the time of this recording. The largest GAM exposure, as we've been discussing, is at this 100,000 strike. That's also right around the 50-day EMA. That's been declining rather rapidly, but currently you can see the 50-day EMA sitting at 97,500. And so our thinking on Bitcoin is that there's been a little bit of a divergence in terms of Bitcoin being a leading indicator for risk on assets, although we do think the likelihood of getting back up to this 100,000 level by year end does look pretty good. Next, let's take a look at GLD, the gold ETF. On Friday was actually down 0.18%, had a pretty nasty rejection off of that 390 level, ended up closing at 386.44, but still the largest GAM exposure concentrations are at the 390 strike and the 400 strike. 400 is our ultimate target here in the coming weeks. We've just reached this 390 and actually tagged that level a couple of times during this past week. Not surprising to see some selling pressure here at the 390 strike, but overall this looks like a consolidation before another leg higher. In terms of our GLD weekly income strategy, on Friday we were actually able to lock in a net $870 profit on our total GLD position. Our most recent position was short the December 5th GLD 390 puts and long the December 19th 390 puts. Ultimately, we closed those out on Friday for a net $870 profit, as I mentioned, and rolled those out up to the 395 puts and out to later expiration dates. And this weekly income strategy has done really well for us ever since we started it back at the end of last April. And really just over the last few weeks, we've had some really big winners. On November 26th, we locked in $3,900 profit on those short puts. And then going back just a little bit further on November 24th, just 2 days prior actually, we locked in another $3,650 on our short puts. And these are basically put positions that we are continuing to roll using shorter dated weekly options to sell premium against our longer dated puts. And so we've been averaging over $1,000 a week going back to the end of last April when we started this strategy. It's been a really great strategy, basically selling premium using hedged longer dated puts and targeting the large GAM exposure concentrations, which are very prominent, especially when using GLD as your underlying. By the way, you can track our trades in real time time as we manage our options portfolio by becoming a member at geeksoffinance.com. As I mentioned earlier, you can also get a sneak peek of what we're trading right now by checking out our community Discord. I'll put links in the description below to both of those so you guys can check it out. Next, let's take a look at a couple of individual names that we've been tracking very closely. First, I want to start off with Palantir. Palantir was up on Friday. It was actually a pretty big day in my opinion, up 2.16%, closing at 181.76, but getting above that 50-day EMA. We had been trading below it for several weeks now. However, gamma exposure has flipped positive, and we're continuing to see large gamma exposure concentrations between the 180 and the 190 strike. And even if we come all the way up here to the 200 strike, that's starting to become a little bit more prominent than it was just a week ago. And so with the big move up, with buyers stepping in down here all the way at 150, and we've seen the big move off of the 150 level back up to 180 above the 50-day EMA, and it looks like the momentum may be back in the bulls' favor heading into the end of the year. So this is something that we're going to be tracking very closely. Currently, the largest game exposure concentration is at that 180 strike, followed very closely by 190. So this could be a trading range over the next couple of weeks until we hit that December OPEX. There's a lower probability that we could hit the 200 strike by year end, but that is growing, and we want to watch to see how much volume is coming in here at that strike in the options market. So we're going to be monitoring this very closely, potentially putting on a premium collection strategy around these major gamma exposure concentrations. Next, let's take a look at Tesla. Tesla was flat during Friday's trading session, but it's above the 450 level, and we're starting to see gamma exposure growing at that 500 strike. That's been there for a while, but is now becoming more prominent, being the largest positive gamma exposure concentration. We've actually been trading an iron condor strategy between the 400 and 450 strikes, and with the move up over the last couple of days, the top end of those iron condor wings are being threatened, and we're considering rolling the position up to target a move between 450 and 500. You can see the largest gamma exposure concentrations are basically between those two levels. The 500 strike has been a potential target of ours, and so now that we're trading above the 450 level, it might actually be time to roll up that iron condor to those next largest strikes. Naturally, though, if you just look at the price action, there is some resistance as we've seen rejections around that 470 level a couple of times over the last few months. And so as we come into this level, there could be some selling pressure period for a few days, maybe even a week or two around that level. This 500 strike is seeing large gamma exposure concentration, not only in December, but also out into the January expirations as well. So that's something that could take a little bit longer into January before we see that 500 level hit. And guys, we're currently running a special holiday sale for a limited time. You can get an additional $300 off our yearly portfolio manager tier subscription. Use code HOLIDAYS2025 at checkout. Definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own trade setups and strategies. And you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much everybody for watching, and we'll see you guys in the next video.